excited to have written this book. In fact, it is my 46th book on the subject. And each year I am so inspired by the excitement that average Canadians have around filing their tax return. Believe it or not, it is the most important financial document of the year for most Canadians, and I am honored to help with that. This year we've added a tax literacy IQ test to each of the other chapters in the book, and that's so that people can understand what it is that they actually don't know. The tax return is an integral part of investment income planning, but also an integral part of retirement income planning. Not only that, if we can think about real wealth management, not just as individuals, but from the focus on the family as a priority, and if we can begin with the lowest income earner in the family and work our way up to the highest income earner in the family, then what we have is an opportunity to really use the economic power of each person within the family to invest and to grow and transition our wealth. All of that begins with filing an accurate tax return for the family. Specifically, it's the accumulation, growth, preservation, and transition of sustainable wealth with purchasing power when you need it. And that's where your taxes come in. Because in order for us to really focus on purchasing power of our money in the future, we have to be aware of tax erosion, we have to be aware of inflation erosion, and also we have to be aware of cost erosion. The most commonly missed tax deduction on the return, believe it or not, is the safety deposit box. Everybody misses that. And people don't realize that you can go back and adjust your tax return for 10 years to correct errors or omissions on the return. Certainly the most missed tax credit on the return are medical expenses, and with an aging demographic, it becomes more important than ever for people to collect all of their medical receipts. In fact, the average Canadian today spends more than $500 out of their own pocket on medical expenses for the family, and so it's really important to understand what kinds of things are tax deductible and to ask your professional about them, or if you're doing your own tax return, to make sure you claim those amounts in the best 12-month period ending in the tax year.